this can save the separate. I'm gonna post it up. Don't stack, guys. If you guys want to stack, just place one big order. Why stack? Oren, they closed. Everybody, please, just like you now. You guys taking notes. Clean page now. You guys need a clean page. All right. Forex tips. And now going to be taken over by Oren Wright. Everybody, please. Where's Oren at? I don't even see him anymore. There you go. All right, Oren, I made you host. You can go ahead and share your screen. I want to thank you guys for being on this webinar as well. I hope you guys learned and ready to take this to the next level. And let's get as many people as we can. Financial freedom. Hit chairman. Chairman is not a hard level to hit. Oren, take it over.
Thank you, Darwin, for that introductory. All right, guys. So market recap. What we do on market recap, we're going to take all of your losing trades, and we want to help you analyze and try to, help you figure out what happened. So market recap is with myself and Chris Baptiste. I hope I got that right this time. All right, so what I want you guys to do is just keep yourself muted. Make sure all distractions are put away. Grab your pens and paper. If you had any losing trades, that's all we want to focus on. So start writing your losing trades in the chat.
Welcome to another episode of Market Recap with Christian Bautista and Oren Wright.
All right, guys, welcome to Market Recap Fridays. This is an episode where we're going to take all of your losing trades, and we're going to help you analyze and figure out what you did wrong. So if you've been on our webinars before, we're going to make sure that everyone participates. So what I like to do is, Christian, before we start, come on and introduce yourself.
How you guys doing? My name is Christian Baptiste. I've been introduced to Forex market about the beginning of this year. I kind of had the knowledge of this 2 years ago, but basically didn't teach myself what I should have. I had a lot of information that I didn't put to use. And then I finally was seeing a couple people on Instagram and stuff posting stuff that I had all the knowledge about, but I didn't put my all in it. So this year I decided, to develop that skill set, learn from a couple people, finally joined IML, ran through IML Academy, learned a lot, met the CEO, met Oren, met Darwin, met Amani, met a lot of different good individuals. And definitely it's been very rewarding. You guys definitely got to understand, you got to treat this trading long-term goals, because this is literally compounding wealth over time. This is not a get-rich-quick scheme. This is nothing that you've ever been a part of before. If you definitely take the time to develop a skill set that no one can take away from you, you can make money whenever you want, as long as you have Wi-Fi. You got to understand this. It's not a sprint. It's not a marathon. It's not a sprint. It's a marathon. You got to get there slowly. Teach yourself at your own pace. Don't try to rush the process because you see someone else having success. Don't worry about other people's profits. That's one thing I tell people. Don't worry about other people's pockets. Worry about your own pockets. You got to learn the skill set first, and then you could reap the rewards. You can't just try learning the skill set and try making the money and then post it. Then you blow your account the next day. It's not going to work. You got to learn the skill set, take some time out like you're doing today on a Friday, Saturday nights, go over the charts, learn what you did wrong, and definitely practice. Do the homework, go back towards the charge, go back a year or 2 years, learn what the market does, and you're definitely going to have a better understanding once you're going in live, once you develop that confidence, because it's basically you're only identifying patterns. That's what we're training our eyes to do, is identify patterns, understand what the market has been doing and what do you think the market will do, and just that's it. It's 90% psychological. It's 10% skill. It's 90% psychological. You got to understand that you're trading with fear. You're trading with greed. You're doing this with emotions. And until you've mastered that, you're never going to be a successful trader because you're going to put in your account live. Once you go live, you know, everybody's done it. Once you go live, you stare at your phone for the rest of the day once you place a live trade. You want to be able to place a trade, your stop loss, you take profit, and not look at your phone and go about your day. That's how you want to go about trading. That's how successful people go about it. They don't sit there 24/7 just looking at the trades, looking if they're going to lose. They know how this works. They know they can't move the market. They place a trade and they let someone else come in and move it for them. That's what you got to understand. It's you don't have the money to move the market. You just place the trade. You already predetermine your risk. You're using proper risk management, and you just let the trade do its thing. There's nothing else you can do about it. So today we're gonna go over wins and not wins, your losses. Any other questions that you guys didn't understand from the previous webinar, and basic IML questions. You guys have any troubles, scanner or etc. How to use it, and let's get it started, Oren.
All right, perfect. All right, so I got a question. I just saw something in the chat. USDJPY, was that a loss or is that a setup that you're about to have, Darwin?
No, I took a $500 loss this week.
All right, so you took a loss on USDJPY. You had a sell limit at 112, 150, right?
Yep.
And this is this year.
Perfect. All right, guys, so we're going to take a look at how Darwin ended up taking a $500 loss on this sell limit on USDJPY. All right, his stop loss got hit. All right, we're on the daily time frame right now. All right, 112, 150. So this was going to be his sell limit right here. Okay, but the market continued to rise right around this zone here. So the first thing I look at, all right, when I'm looking at this setup right here, and I'm saying that the market is going to rise back up. So what we're looking for is we need to find, guys, please don't write on the chart, please. All right, so what we're looking for is, let me just erase that real quick. All right, there we go. And get this out of here. There we go. All right, so what I'm looking for, as this market is rising back up to the top, I'm looking for resistance in this zone, okay? I'm looking for resistance in this zone that's going to tell me that the market is going to make a U-turn and get pushed back down the opposite direction. Now, if anyone lost this week, hey, everyone lost. Let me tell you why. Because the market was so volatile this week. We had FOMC pushing the market further than expected. You see this zone right here? This is resistance. All of this is resistance. So when this market came through, Christian spoke about this last week. When the market is holding a level, all right? Look at this, all of these wicks right here. Now I'm going to show you, excuse me, I'm going to show you why the market broke through. All right, I'm just going to go ahead and grab, this right here. And we speak about this a lot. When you got resistance, how many times, I'm going to go ahead and write this on here. How many times will a market retest the zone? How many times will a market retest a zone? Okay, put this here. Put this here. Just in case. How many times?
112, 650.
All right. Before breaking through. Okay, that's going to be the question. All right, repeat that one more time, Darwin.
Stop loss was at 112.65.
All right, 65, right? All right, let's go here. Parameters. 112.65. Perfect. All right, here we go. Here's your stop loss. Your stop loss got hit right on the wick. Okay, so you got it, Rich? Definitely. All right, man. Yo, thanks for coming through, man. Definitely. Don't be a stranger. Come through again. All right? All right. Talk to you guys later. Definitely, man. All All right, so here we go, guys. Sorry about that. So right around this zone, how many times will the market retest the zone before breaking through? This is very important because this is known as a fake out what just happened. And this is why a lot of traders got caught up in that little sell that was going to happen right here. But then the market pushed through, and look what happened. It came right back down, all right? It hit your stop loss and came right back down and broke through your entry, okay? So you see the zone here? This is a little support area. Market came back up. 1, 2. See the zone right here? 1, 2. And look what happened on the third time when that market came back to that zone. On the third time, it threw a wick right up to the top, broke through, and went right to this resistance zone right here. Right to this resistance zone. So when you plotting your stop losses, don't put your stop loss at the nearest resistance. Because if the market wants to go there, it's going to go there. It needs a reason. And last week with that news, the FOMC, it pushed the market right to that zone. Because let me tell you something, the market knows exactly where we have all of our sellers are. We got sellers here. We got sellers right in the zone here. So what we're going to do, stop hunt to the high. Stop hunt to the high. Grab all of those buyers right here. All right, buyers, and if this market go through, it's going to keep going up. Grab all those buyers, boom, and bring them down. We're going to grab all those sellers that's right in this zone. We're going to take them up. That fear, that panic made everybody put the stop loss. Everybody exit the trade. They got out, and look what happened. The market came right back to where you originally entered your order at. All right, remember, this is on the daily time frame. So this market went up and came back down 100 pips. 100 pips. So Darwin was speaking about it earlier. Many traders, all right, this went 100 pips. So in order for him to lose $500 on this pair right here, 100 pips, he had to put in at least, what, a .50?
Standard lot.
Well, standard lot, it would have been $1,000.
No, the stop loss was 50 pips away. That was my sell limit stop loss.
We got in at 112.50. Stop loss 112.65.
50 pips, bro.
Oh, so yeah, with a standard lot,
Yeah, I know it sucks. That was a.
What I want to teach you guys today is, all right, this is very important, and Chris, he's going to pick it back off this in a second. If you have a pending order set, guys, we can't control where the market goes. Everybody wants that perfect entry. Here's a safe bet. All right, enter all of your orders at a 0.01. You're going to thank me in the long run, because if the market pull back 100 pips, give me 1 second. If the market pull back 100 pips, I'm going to call Montreal Watkins. I'm going to unmute your mic. Can you hear me?
Don't be shy.
Yeah,
and don't be shy, Montreal. Montreal, you enter your order at a 0.01. The market pulled back 100 pips. How much did you lose?
If you trade at 100, if you trade at 1 cent and it retracts to 100 pips.
Yes.
Shit, what's that? $1?
$10.
$10.
Yeah.
You just lost $10. Okay, 0.01. It's very important that everyone knows this also. 0.01 equals 1,000 shares of a country's economy. Okay, guys, remember this. We're not just recruiters or marketers. We're traders. We're investors. So we have to speak like investors. Okay, 1,000 shares of a country's economy. Okay, so 0.01 went back 100 pips. You're down $10. But look what happened. The market came right back into your order. As soon as this market broke back into this zone, what are you waiting for next? Waiting for it to pull back just a little bit more. And this is actually a V bottom here. You got a nice little V bottom here. Once this market pulled back in the zone, now you can upgrade to a higher lot size. Okay? But you still got to be cautious. Now you can go as high, I would say like a 0.05. Okay? Chris, go ahead. You want to pick it back off of this, man?
Yeah, can you give me remote control?
I'll give you a remote. 1 second. Where is it at? Here we go. Remote control, Chris. Man, we got so many people in here. I can't even find your name, Chris. Wow, this is amazing. Guys, I'm telling you, do not be afraid to ask questions. I'm just looking
There
for
you go. I got it.
You got it?
Yeah.
Perfect. There you go. Let me just move this out the way real quick. Hold on. Move this out the way. There we go. This thing is blocking my view. All right, it's all yours.
You've been too hyper and not listening.
All right, so y'all see that market had a peak high on a 4-hour higher time frame, had a peak high. So on a downtrend, we spoke about how many levels of drop you usually see. You got 1 level, you got 2, you got 3 extra V. And then what the market did, level 1, consolidate, level 2, level 3, give you that M. The market was on a, you see that M, perfect. The market was on an uptrend. You continue, this is on a higher time frame. So a higher time frame is telling you. When you shift down to the 1 hour, you know, I had a lot of people tell me that this market was going to drop. People were selling early. Swipe trades were selling. You guys didn't take those pips. You guys are foolish because the market was always on an uptrend. North Korea, or the speculation, this was continually to rise the U.S. and yen. So we have this gap that still people was trying to sell because of this gap. They see a gap and they're thinking the market's automatically going to come down. The market could continue going up before it comes down. It could go up 2 months, 3 months. It doesn't necessarily have to come down because you saw that gap. So the market rose, then consolidated, found the base, rose again, one more time, and consolidated in this area. So if you're you got 1 level of consolidation here, hitting the highs, drop, continue rise. Then you have again here, hitting the high, drop, then news, FOMC, spike this candle. So now you know that the market is in an exhaustion zone when you have your market was all on an uptrend. Why? It was breaking the highs. So there's no reason to be selling. You see it breaking your highs also on the 4-hour daily. It's been breaking highs. Once you find the market come to a zone, this is the zone. Once it comes to a stop and consolidates, you can see a head and shoulders pattern. You see it right there, head, shoulder, shoulder. This is when you will want to sell. After, this is why I'm a trader, I never put pending orders. I'm always, I want to see the candlestick formations live. I want to see a morning star. I want to see these wicks. So I want to see that the market held this level and didn't break this high. When I talked about last week, when the market holds it, that's when you want to get in, when it holds it and doesn't break it. This is the high. This is the left shoulder. This is the right shoulder. When you see that the market stops and doesn't want to come back up, this is when you know, all right, you got it. It stopped going up, and you look for previous support. You look for previous resistance. Market has been breaking all the resistance, so you're not selling yet. Let the market come to a stop, and then See what it does. See the story is told in the candlestick formation, the wicks. You see that it finally came to a stop at previous resistance. Finally came. So we had a short term, because the market still is respecting this. We want to see a breakout. We had a short term sell on a head and shoulders, broke out. You've seen this, and you've seen this last wick, that doji, and this last wick, this doji. And when the candle gives you this last wick, this is when you know they made their move. They already have enough buyers trapped at this level. They stopped and they started consolidating, going up and down, going up and down, going up. They're trapping buyers at this level. That's all they're doing. They're trapping buyers. Then what they do, they shift the market 86 pips away. Now now you got to understand what they will do. Okay, so now coming Sunday, Monday, they make false moves. So coming Sunday, if you're gonna continue to, is that,
Guys, don't write on the screen. Don't write on the screen, please.
coming Sunday, Monday, if they still have more money, if they don't have enough money trapped, they will come back towards the high and form another M. Form a high, not break that. They will come, what is this? They will come up. Make a small pullback. Go up again, not break this high, and then go short. If they're still respecting this trend line, they've been up thousands of pips. They're still respecting this trend line. They're still respecting it. So I want to break out strongly of this trend line. This is still, consolidation at that level. I want a strong breakout. I'm not going to miss nothing. But if I get in 20, 30, this, when it falls, it's going to fall. So I'm not going to miss a lot. So I want to wait for a clear confirmation, although this head and shoulders right here is clear right in your face. That's why you want to be live. You want to be up at these hours when you want to see this candlestick. You want to see this shot up, did a small pullback, came up, did a small pullback, came up, formed a head, pullback, didn't break it, pullback, didn't break the high again, the left shoulder. And then you want to see this. Once you see, I would have showed that this candlestick formation right at 15 minutes of that close, I would have sold. It makes, you could see it makes another M. You could see the head, shoulder, shoulder. Not, you see it holding. So you want to sell when it doesn't break with this wick. Then one more wick to the high, next candle, this would be a nice entry. This, at the end of this candle, at the end of this 15 minutes with a clear confirmation to sell. Because the candlestick before that gave you a nice, more wick, but closed right here, closed right here, next candle, open, close right here. You could sell at that railroad track formation. That's a candlestick formation. You could sell there. It's a clear indication that they've got their move. They've been consolidating all this level to then come down. Now, what they did 1 level drop, 2 level drop, 3 level drop. Now they're going to consolidate at this level. That's all they've been doing. If you came on Friday looking to do something with gold, do something with US yen, nothing happened. Nothing. The market moved, I think, like 10 to 20, 30 pips. Nothing. That's nothing for UJ. Nothing. I've been looking at re-enter this. Nothing happened. Nothing at all. So why are you going to chase a sell? Just wait for a clear indication. The market tells you. I remember seeing this. I remember seeing this before any of this happened, and I was waiting for a sell, but I was with my girl, so I remember seeing this. I was waiting. The market didn't even do this. The market was wasn't even coming up yet. Market, I saw this and I knew, okay, if they come back and don't break this, I would look for sell. So what happened? Market came back, didn't break it. I could have sold early. Okay, it came back again with that wick. That once you see that last wick, it tells you sell. That last wick is a clear indication we got our move. We got our move because the next candle went down and then you got shifts. You got 1, 2, 3, 4, 5, 6, 7, 8 red candles going down. They got their move. That right there, they got your move. In 15, 30, 45, an hour. In an hour, you'll be 40 pips in profit. Okay, nice. And then in another, it'd be another 40, 80 pips. So you got to understand that's once you see this, that's why it's kind of iffy to put a pending order when the market's still up because you don't know if it's gonna keep rising. Like if you put a pending sell here, the FOMC just killed you. It's not certain that it's going down yet. You got to let the market come to a consolidation level and then see what is going to form. See a formation, see a candlestick, see a head and shoulder that is not going to break. Let it come back one more time. Well, that wick tells you. That wick is telling you the story. A candlestick tells you everything. It told you right there that we're done. We're done. This week, nice. Railroad track. You got to look up candles. And this is what I say. You got to put time and effort to studying. I've studied so many different stuff. You got to put time and effort. This is a railroad track. This wick is a clear indication. Let's do it. Let's go back there one more time. Trap more buyers that think we're going to buy. Next candle go down. Then we're really going to shift the market off of them. And then we're going to consolidate at this level. See how many people we could trap again. If they have sellers trapped, no, they're going back to the high. I'm letting you know that. If they have people selling here, they're going back up here, hitting your stop loss. If you're selling, they're going to hit your stop loss. If you're buying, if you put a buy stop, they're going to get you. And then once you got a stop loss here, they're going to come down and get that. That's all they do. They trap you. That's all they do. If you don't know where they're going, they're going to just trap you. So if you got a sell stop, if you got a pending sell, they're going to come up. They're going to get it. Then they're going to come back up, hit your stop loss. Now you're mad. Now you're not looking at what's happening. You're pissed off. Now that's what they want you to do. But if you're nice and calm, all right, they hit my stop loss, what are they doing? Okay, they come back here. They don't break this. Okay, now I'm a seller. Now I know. Now I have a better entry to sell. Why sell here when if they come back 50 pips, you got a better entry? So there's no need to rush. You're going to get a better entry. Let them do that. So they're going to consolidate at this level. Now they're going to form. It's kind of like a wedge. You see these formation all the time. And you kind of get it. Now, this is good that I see it because you kind of get it when a breakout's going to occur. So this is going to tell you what they're going to do. If they break out high, they're going to hit the stops high, consolidate, not break this high. You got to be here live. You got to be there live to see it. They're going to consolidate at this level for about 30 to 90 minutes. It could even take 2 hours. You got to see that. If they're consolidating at this level and not breaking the high, sell because you know where they're going. They're going down. They're consolidating at this level. They're trapping. They're just getting ordered. They're trapping buyers, trapping buyers, trapping buyers. How many buyers can we trap before we shift the market? That's exactly what they're going to do. They're going to come up here, hold this level, consolidate. Consolidate, 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 trap. Now, if they already got sellers trapped here, if they got buyers trapped here, there's no reason to come up here. There's no reason to come up here if you got the volume.
You know what I was going to say, Chris?
Yep.
Looking at that, you're absolutely right. If they got all the money that they need, right in that zone, this could be the perfect measured move right here. This could be that perfect measured move right there, taking this breakout 100% of that move.
Yep.
So all of this right here was just nonsense. Pushing the market right into the zone to trap all of those buyers just to bring the market back here. So all the sellers, you had it right wanting to sell, but you had the perfect entry in the wrong direction.
Mm-hmm. Absolutely.
Let's answer some questions in the chat real quick. Let's see what we got here. Lot size can be changed at any time during the trade.
No, you could exit some of your order. Like if you got one lot size, you could close out 0.50. You take out half of your order, and you're gonna have 0.50 left. You could close out 0.75 of a lot size on that trade, and then you have 0.25 left on that trade. You can't close out orders depending on how much you want to close out. But once you're in a trade, you can't try to dump your once you're in a trade and you want to close, you can close half of your trade. You can't change the lot size. The only way you do that if you're closing some of your trade, you're taking profits, or you're trying to minimize your losses by bringing down your risk of how much you're willing to put up. Okay.
All right. Janine wants to know, can we explain how the time frame work together? All right. How do the time frame work together? So, Janine, when I first started, okay, let me just backspace. When I first started, I will start marking up my charts. Like, let's say I want to see what the monthly chart is doing. We're looking at USD JPY on the monthly chart. You guys can see we have a huge inverted head and shoulder here on the bottom. Left shoulder, head, right shoulder here, okay? Now, I first started marking up my time frames on the monthly. Now, here's a little concept that I use when trading. I always like to use let's say 4 time frames or 4 weeks, 4 hours, whatever you want to call it. So if I'm using let's say the 15-minute time frame, how many 15 minutes equals 1 hour? Well, that's 4. So if I'm using the 1 hour time frame to mark up my charts, my entry is going to be based off of the 15 minutes. If I'm using the 4 hour time frame to mark up my charts, my entry is going to be based on the 1 hour. Daily, 4 hour, weekly, daily, monthly, weekly. Okay, you don't want to be marking up your charts on the monthly and then go down and look for your entry on the 15-minute time frame. The monthly, honestly, guys, is overkill. It's for like long-term traders. If you're looking to get into this trade and truly set it and forget it, you're going to mark up your charts on the monthly time frame. You find the high, you find the low. Another thing I like to do with the monthly, I like to find the highest high, the low, measure the distance between the two. Okay, let's say we got 2680, right? 2680, I'll take my fibs, all right? Take my fibs, and all I'm looking for is half of this, right? Looking for half of this. So half of that will be right here at the 50%. Take my fibs out the way. Next thing I'm going to do, because now I'm going to break this down. I'm going to break it down. Now I'm just going to take this right here, measure this. I want half of this. You got to put the work in. You got to put the work in. You can't just open up your chart and say, you know what, oh, I'm going to place a trade. There you go. Measure half of this. So I just took my, this 2600 pip.
I have a question. Just before I ask that question. Just want to thank you guys. I see you guys doing a great job by explaining and just the sacrifice putting behind it to help us out become a better trader. My question is this. If we know USDJPY gonna retrace back all the way to 114.462, is it safe to put a sell on it? Because I was thinking that if we look at the patterns and we know that for sure, I don't want to say for sure because we're trading and we know nobody can control the market, but we know that USDJPY is gonna go all the way up and we're tracing all the way to 114.462 or 114.4 something. Why are we still putting a sell on it? Why not just leave a buy? We can put a buy at a mini lot, a micro lot, and have a 50 or 60 pip stop loss on it, and just leave it where instead of trying to do quick sell and see if we can make a couple pips out of it.
Well, that's a good question. Honestly, we can't, sit here and predict and say, I'm going to predict that the market is going to rise. You have to wait until you get that set up. All right. You know, just getting into the market saying, I heard that it was going to go up to 114. You know, there's no guarantee because the market can move 100 pips right now and then drop down 100 pips, do 100% retracement. So you have to wait for your setup in order to actually get into the trade. Because if not, you're just going to be sitting in a losing trade.
Because you could see that the market's been pushing up. If you get these pullbacks, that's what you want to do. I mean, I got that guy kept telling me that the market's coming down when you guys sold. It kept bouncing off my moving average as support. So I knew that move, that sell was just to get sellers trapped. I knew this move was to get sellers trapped. They're going to rise. 1, 2, the doji probably showed you downside, and then what close up here, probably show you buy, what close up here, and then they actually went up. They're showing you what they're doing. If you just look daily, you could see there's no slowdown. So why are we selling yet? There's no slowdown yet. So why are you selling yet? When they're giving you a respect to a support, when they're giving you a respect to a support, you want to wait for confirmation to buy. So you want to, this is daily. You want to wait lower time frames for confirmations to buy. You want to see formation. You want to see them not break out of here. You want to see them respect this level. You want to go down. You want to see what are they doing. They've been consolidating. Like all this on a 4-hour doesn't look like much. You drop it down to 15-minute where you want to enter. You see what they're doing. They're consolidating at this level. They want to see how did we get our move up here already, or did we get our move already? If they got their move already, they could just continue down. If they didn't, they will retest to get more buyers, or they trap the sellers here. It's all about the money. You got to understand, if they have 5 million trillion contracts down here as a sell, and they only have 3 million as a buy, it's imbalance. They're gonna go trap the sellers. They're gonna go up since they have 5 million contracts as sell. Why would they go down? They want to. It's you gotta say it's where the money is at. So if they have 5 million trillion sellers, only have 2 million buyers, they're gonna go towards the buyer because they got sellers already. They got a lot of sellers. So if we got all these sellers trapped, why would we give them what they want? We're going to be selling. Why do that? Why not switch it? Now we got them all trapped. Now we have 5 million of their money. Now it's ours. Now we hit all their stop loss. Well, you got stop loss here. You got stop loss here. You got stop loss here. Let's get that. That's what they see. They got their sellers. They got the stop loss up the high. They got the stop loss at the resistance. You got the stop loss here. They see that. They're going to go get it. Once you're in line with their trend, when you see that they respect this high, then you could sell. If they break it and they retest it, why are you selling? Now buy. You got to see this live. You can't just have your pendings and just, I think they're going to sell because they've been going up, or I think they're going to buy because, they drop a little. You got to see this live. You can't just do a hype. You can't just guess. You got to adapt to the market. Yes, like Darwin Lopez said, you got to adapt to the market. You can't just be stuck on one bias. You can't just be stuck at selling. If they don't go down,
happened, Chris. I think I know what happened. Most people, they see that the stochastic oscillator is oversold.
Yeah, they told. Yeah, absolutely. So I just said that. You're so into the indicator. Focus on what the market is actually doing. The indicator is just a tool. You can't trade based on that. You're gonna get burned if you have it. You can't just trade on your indicators. You gotta actually see what are they doing. You gotta look at the bigger picture. Gotta go the time frame. The indicator could be telling you sell. That could be short term, and then the market just shifts. You gotta adapt to the market. You gotta see what they're actually doing. What are they doing? Oh, they've been rising. 1 level, give me a retracement. 2 level, give me a retracement. 3 level. When I say market moves in 3, 4, it could extend this level. It could extend this level if it wants to. If it has sellers trapped, that's the only reason they will extend the level. Now, if they have more buyers trapped, then we're going to shift the market. That's what you understand. If they have more buyers trapped here, if they're thinking, oh, man, they see this, they're thinking, oh, there's a third touch. Who? Oh, yeah, we got them now. If they see that everybody started buying, they're gonna be like, no, we're gonna go down. We're not gonna let you get a little of what. If they see, you gotta say, if they see people throwing lot sizes at these levels, they're thinking they're about to make 80, 50, 200 pips. They're gonna like, no, we're gonna shift them. We're gonna hit your stop loss. You got a stop loss below this low. We're gonna shift the market. We're gonna hit your stop loss if you were buying. That's what you gotta take both sides. You can't just be stuck at just one level. You gotta understand, if they don't do this, they could do that. That's how you gotta set up on the trade. You gotta take both bias. Okay, if they do this, okay, we good. If they don't do this, they'll do that. You gotta take both sides. You can't just be stuck on one. You gotta adapt. And that's how you become a trader. You gotta take both sides. Because if you got in at you got in over here, right, Darwin, like 12.15?
Yeah, somewhere in that area.
Yeah, if they come back and do this, and if you would have saw this live, you could have took that buy to your stop loss. You could have got out, took that buy, or still held your buy and just hedge. It's called hedging. But if you're not an advanced trader, how to do that? But you can't do that. You could minimize your loss by taking those profits up, and then what happens? Trade comes back down. Oh, now he's what? 15. Now he's good. He's 11, 12 pips in profit. Now you're good because he got in at 12.15. Now you're good. Now you could have bought all this up until they did not. Now you're adding sell. When you see, they stopped here. Now sell here, sell here, sell here. Now you could add your sells, minimizing your negative drawdown that you got in. That's how you hedge. But you could always, cut your losses short. You see them, they still going up. You see these candles still strong. These are strong candles on a 1 hour. 1, 2, 3. Strong candlestick. That's a formation. I think it's like 3 soldiers, some crap like that. You could see this. And it's all about formation. You gotta see these candlesticks. Once you see candlesticks, it tells you the story. It tells you everything you want to know, everything you want to understand. Keep going up, give a small retracement, boom. Could have got that. What? Well, how many pips I gave you? Could have, easy.
So
27, easy. To the stop loss, now you see the wicks.
What he's saying right now, guys, my fault, Chris. No, it's very important that, I understand that you want to get into the trade. You feel that the market is going to keep rising up to 114. It's very important to wait for your setup. All right? Wait for your setup, because if you don't have your setup, what are you doing? Now you're gambling. All right? You're gambling. We didn't get into trading to start gambling. All right? Let's move on to the next one, Chris. We got some questions in there. RSI is good to detect divergence. I know a lot of traders who use RSI to detect divergence, but me personally, not taking this away from anyone else, I don't use indicators because I focus my eyes on price, right? Honestly, just me personally, I can find divergence right in the candles. Okay, I've shown a few traders how you can do this also, but that's something that we're going to talk about on another time, because I can find divergence just right in the candles just by switching over to the line chart. Okay, utilize your platform. Many people have this platform, and if you want to make some money, learn your platform. Okay, you see this right here, you look at this and say, here's a gap right here. But if you switch over to the line chart, there's no gap. Okay, we got a beautiful inverted head and shoulder here. Now, if I was to draw this line, a nice little trend line down here, just like this, if the candles are sticking up, okay, let's say if we had candles sticking up like this. You see your line chart is going down. But if I had candles sticking up like this would be divergence right in my candles, okay? So that will be divergence. You don't need an indicator to see that. You can see that right within your candle chart. And this is something that I study looking at my chart, okay? Go right over to you switch over to your line chart and just match from the point of the line chart shows you exactly where the market closed. The candle chart shows you how far the market went before coming back up. Okay? So like I said, you can see divergence right into your candles. All right, let's go ahead to another one. Someone else, adapt to the market. Views on commitment of traders. Okay. Philip Robertson, unmute yourself real quick. Philip Robertson, unmute yourself.
Oh, Roberson.
Roberson, there we go. Sorry about that. Okay, talk to me.
Yes, sir.
Commitment of traders. What do you mean?
Commitment of traders is pretty much well, you go on the internet and it tells you how many commercial positions are opened as well as retail positions are opened in the markets.
Okay.